Okay, that's the word that's coming into the auto pack as well as the pecking order. Amnish Aggarwal from Prabhudas Lilladher also now live with us. Good morning. Look how things have changed. The indices are 14% from the low. If you look at the last 5 days, the Nifty is higher by 5%. FIs have turned buyers, and a lot of this rally has actually been led by autos, which have taken leadership, as well as consumption and, of course, the banks. So, Amnish, with that, I'll come to you. For banks and the public sector banks, what would be your pecking order? And are you picking them over the private sector banks? There's a lot of the conversation that we've been having.
Okay, so good morning. You see, as far as banks are concerned, we have been overweight and positive on banking space, but we have been confining more to the private sector banks, with the SBI being the only PSU banks which we have been recommending. So as far as your other PSU banks are concerned, I think now some of them have shown reasonably good numbers, but even then our preference, yes, many of them are actually available at reasonable price to book values, but a lot depends upon how they go into the next level, how the growth rate is sustained over there. Definitely, if one just wants to play value, there might be value in some of these stocks, but private sector banks is where the entire, I would say, the action lies, and they will continue to gain share in the long term.
All right, let's bring on board Amnish Aggarwal as well, who joins in from Prabhudas Lilladher. Amnish, good to have you on board. Lots to discuss, but let's begin by getting in your views on the overall outlook when it comes to Zomato. Now that we have the news coming in with respect to Uber Tech looking to sell stake in the company, the kind of results that the company delivered, the phenomenal reaction as well that we saw on the stock price, what's your sense?
Okay, you see, Zomato has shown what people are referring to as adjusted EBITDA, which excludes your ESOP expense and some of the other expenses. But I think the industry as such, it has got only two players. It needs to evolve over a period of time. And secondly, you see the recent acquisition of Blinkit also, I think that space is quite competitive now. Even Big Basket has entered that space with Big Basket now. So the reaction in this stock is to do with a bit of, say, reassurance that the overall losses will come down. They might turn a bit positive, okay, over the medium term, but also because the stock has corrected significantly from, say, 160 plus rupees to sub 50 rupees. So I think still I would be, say, slightly cautious on this, because it is, you can say, just 1 quarter sort of numbers and the promise which they are showing. I don't rule out that, say, in case of Blinkit and all, the losses will increase because it's a competitive space. Yes, it is evolving, but then if you look at the way stock has corrected, one can say that it offers value, but then definitely there could be many ups and downs as we go along.
So be prepared for many ups and downs, roller coaster ride. These are companies that, of course, like to pivot as well. So watch out for Zomato. Naresh, yesterday we saw Escorts, down by 5%. Clearly a reaction to the earnings. The company lost its market share, particularly in the north and eastern parts. We had the top management here on the channel guiding that, the margins should get better after 2 quarters. So after the 5% fall, does Escorts look attractive, or be prepared for more weakness?
So the chart has been a little odd one post that open offer and the special situation, and then a crack towards that 1450-1500 mark. So in the near term, it's almost a trendless chart, unlike the rest of the names in the same basket. So out here, I would expect 1500-1550 to hold on, and on the upper end, it's 1750 to be a stiff resistance. So out here, I think the relative choices are better. Mahindra and Mahindra, Ashok Leyland look better. So no clear view on Escorts. I would still go with M&M and Ashok Leyland.
Right, let's get a move on then and hear it out then from Manishi Ray Chaudhary as well of BNP Paribas. What is his outlook when it comes to the auto sector and the energy pack?
We also like some of the consumer discretionary companies, particularly autos, which had been underperforming for quite a while. But now we're seeing discretionary consumption coming back, and we have recently highlighted this as affluent consumption in India. I think that's going to be the theme over the next few years. till recently, we were quite positive on the energy universe. But over the last month or so, we have sort of pruned our exposure to the energy universe, and we have taken out some of the pure plays. We still have the conglomerates in our Asian model portfolio. The conglomerate energy exposures in India tend to benefit not only from energy prices or refining margins, but also from the industry concentration in telecom, as you would appreciate. So I think broadly one could say that the extent of bullishness on the pure play energy exposures have been trimmed down slightly, even though we still continue to maintain exposure to the conglomerates.
That's the view coming in from Manishi Chaudhary there, his outlook on the energy space as well. Meantime, yesterday, the likes of UPL, Hero Moto, SBI Life, Britannia sulked in the trading session. HDFC Bank and Bharti Airtel included. Kunal, let's get in some chart checks going on these candidates. You had the likes of SBI Life as well as Britannia that's going to come out with its numbers tomorrow under pressure. What's your view on the charts?
So I think for SBI Life, I would particularly be very bullish on the stock price. Now, after last week's of price action, very strong up move for the stock price. Of course, it's gone to a bit of an overbought territory, but then, these are classical signs that when a stock breaks out to a new range, you expect the stock to get into a gap up mode, then a couple of days of sideways or a mild correction where the stock retraces maybe 30% or less than that in terms of the previous price rally. But then, the stocks, they managed to get into a very strong uptrend, thereafter as well. So my sense is that SBI Life at the 1250 mark approximately should find some good support at those levels. And closer to that support point is a good point where one can look to enter. Britannia, on the other hand, and this is my sense over the last 2 weeks for the entire FMCG, that these stocks have bound to get into a time-wise correction. So Britannia managed to rally from 3,150 200 to almost 3,900. And that's a steep rise in a very short-term time frame for these FMCG stocks. And when these stocks rally up so swiftly, there's bound to be more of a multi-month correction or a time-wise pause into these names. So I think Britannia, as well as most of these other FMCG names, are actually going through that.
Okay. PSU banks, and it is one of those believe it or not moments. State Bank of India is nearing a life high. Imagine the ring of State Bank of India at a lifetime high. Pre-COVID, it was called as the big underperformer stock, which had a great balance sheet, but no acknowledgement for the intrinsic value which they had. HDFC Bank, for the longest time, has enjoyed that pedestal positioning. But post-COVID, the setting changed. And State Bank of India has had a roaring comeback in terms of acknowledgement, and also the fact that domestic institutional investors are buying. And the domestic folks, some of the Indian fund managers, they don't have this bias about not buying into a PSU stock. So State Bank of India, post-COVID, that's from, let's say, 2020, has given you a return of 180%. HDFC Bank during that same time has given you a return of only 42%. Amnish, can State Bank of India be 1,000 rupee stock? And when I say 1,000 rupee stock in next 3 years, am I being conservative or am I being aggressive?
Is State Bank of India, like many of the other banks, they, through their subsidiaries or affiliates, they are practically into the entire gamut of services. For example, after a while, your SBI mutual fund will get listed. You are already having SBI life insurance. The kind of distribution reach they are having, so that is definitely more than any other bank in the country. So over a period of time, the issue in the past has been, one was the NPA, and the second was that your growth rate historically has been lower than the growth rate which has been achieved by many of these private sector banks. Now, if the State Bank of India, now with the balance sheet in a much better shape, and if the growth revival happens, can State Bank of India go to 1.5, 1.7 times price to book? That is, I would say, practically possible. Now, 1,000 rupees over a 2-year time frame, I think that is, I would say, that is something which we are not visualizing at this point of time.
Tourism in the market is mean reversion, and that's what I've realized over the years. HDFC Bank was trading at a price to book of 4 times. State Bank of India was almost trading at a price to book of 1 time. I'm purely talking about the banking business here, subsidies not included. Now HDFC Bank is trading at a price to book of about 1.8 times, and State Bank of India has potential to trade at a price to book of 1.5 to 1.8 times, which means that if the current momentum and this current adjustment continues, then you actually could have a situation in next 2 to 3 years, State Bank of India and HDFC Bank could actually be commanding the same multiple. I never thought I'll say that, but that's what markets are.
And you're nodding, that means that, you know,
No, actually, I think it's a very valid point. But over the last, I think 1.5 to 2 years, you can see the price performance as well. The markets have rewarded SBI much more. So when we talk of banking stocks doing pretty well, there are just 2 names which actually stands out over the last 2 years, and that's ICICI Bank from the private sector names, and then it's SBI. So you have to have these 2 stocks as part of a broader portfolio because of the price performance as well.
And Naman, this is where markets, I think, are still underestimating what financials can do.
Yeah.
I mean, like in Parrot, I've said financials.
Yeah.
And I would still continue to say, I may sound like an Parrot, but financials is the only sector where I think I can see a 15 to 20% earnings growth for next 2 to 3 years. Everything is going in favor of financials. Balance sheets are clean. New credit cycle has started.
Look what Bajaj
NPAs are
Finance
behind.
did that day.
Then the threat
and the
from-
market reaction.
Yeah, threat from NBFCs has lowered as well, as Sridhar Sivaram was saying. It's the golden period right now. Pick any bank and you're good to go for the next 5 years.
The mistake, what I think many investors may end up doing is the temptation to buy something cheap.
Yeah.
The right to win in financials still lies with large banks.
Yeah.
And you may see a deep swell in a Federal Bank or RBL or an AU Bank. They have their own niches, but just think about it. How much has Bandhan scaled up? How much has Federal Bank scaled up? How much has Karur Vyasya Bank scaled up? How much has AU Bank scaled up? They may grow in their own niches, but have they made, can they be the big
Yes,
daddies?
Bank of tomorrow.
Yeah. I mean,
Yes
that's
Bank,
not a...
sorry, HDFC
Sorry.
Bank. I had Yes Bank on my head. But, Kunal, I hope no one turns the Yes Bank way though. But again, would you extend your list beyond SBI and ICICI Bank?
So
and if so, where?
I would bet on the mid-cap, banking names as well. So I think Federal Bank is something which I technically like quite a lot. And I believe, for a change, it's Federal Bank which has actually led the breakout in terms of a multi-year high for itself, much before the other large cap peers from the pack as well. And then from the PSU names, you have Canara Bank and Bank of Baroda, which have subtly moved up higher for themselves. I think they are up some 15%, 20% so far, if I'm not wrong. And the major part of the price performance last month, which we had seen, was from the PSU banking names, and SBI of course was one of the stronger performers, and then you had Bank of Baroda and Canara Bank, which were the other 2 performers. So I think these are the 3 other names which I would continue to bet upon even from current levels.
All right, that's the list when it comes to the banking stocks. What about mid-cap IT then? And Amnish, let's get in your views. After having dissected the kind of results that we've seen so far, the management commentary, is it a very bifurcated view when it comes to large versus mid-cap stocks? Are you sticking with the top tier names, or is there a lot of potential even in the mid-caps?
You see, mid-cap IT stocks, they had done really well over the last 2 years. Now I think the gap in the multiples of large cap and mid-cap, that has narrowed down. But having said that, the kind of situation we are in, where your margins are under pressure, the P multiples are contracting, and there are fears of some sort of a slowdown happening in the, US markets, I think we would still be more comfortable sticking with large cap names, whether it is an Infosys or a, LTI, or even for that matter, you can say in the niche space, a company like LTTS.
Okay, more stock ideas. Naresh, Nazara, look at the way it has performed the week. What we saw, hitting the upper circuit after its earnings, but another 9% rally on the stock yesterday. Technically speaking, when one looks at the stock, And the chart, what is it looking like?
So the stock saw a bump up a month back when it did the bonus or split, made a top around 700 odd levels, corrected back to that 520, 550 mark. Now the data is not much on the charts in terms of longer term, but if we look at the last 3 months, it made a bottom around 525 in May. It made a bottom around 475, 500 in June. And very recently, 3-4 days back, it made a bottom around 520. So one thing is clear, the stock is finding support around that 500 to 530 mark. The interim highs in between are 709. Yesterday, we made a top around 730. So a reversal seems to be in place out here. The problem is the 3-day move from 530 to 700 levels does not give a risk reward to buy here. So I would expect, say the stock has trended well, the trend has changed, but cannot take a trade here unless and until there is a pause for some time where we can initiate with some stop loss. But if somebody has it, it's a hold here. Finally, seems like a reversal and the major bottom is in place.
Companies which I would like to just mention again and purely from the results table. One is 𝐬𝐤. Numbers came yesterday. I was looking at numbers in the morning, and I think numbers versus a loss, there is a profit. TCI also, the year-on-year comparison, numbers came during the market hour yesterday, I think at about 3 o'clock. Numbers do look impressive, and there is a deep comeback which is happening in the entire logistics space. So is logistics now the next port of call? And just think about it. Truck sales have gone higher. The diesel sales have gone higher. The economic activity almost has normalized. So then why should logistics stocks not come back? 𝐬𝐤 is nowhere close to its 52-week high. Blue Dart is nowhere close to its 52-week high. Could these stocks be on everyone's radar? Delivery, by the way, is one rare so-called new tech company which is sitting at a reasonable high. The collateral damage in delivery has not been as substantial as what we've seen in a Policybazaar or a Zomato or a Paytm. Amnish, coming on logistics. If truck sales are more and if diesel sales are more, I would imagine that this is a good business to be in now. Logistics.
Yeah, you see in the past 2-3 years, in fact, logistic industry has come a long way. Now, if you combine the entire ecosystem, for example, the data point which you are sharing that the truck sales are rising, diesel sales, all these point out to that the economic activity is normal. And as India has successfully skirted actually the fourth wave, I think in the coming festival season, all the logistic activity overall in the economy should improve. Now, whether it is due to e-com or due to, you can say, other stuff. So logistic companies in terms of volumes and all, they will do very well. And with the fact that now the crude prices also, they are in a more comfortable zone than they were, say, a couple of months back. I think logistics companies should have a strong year ahead of them.
You know, the one category that has been doing very well of late has been paints, actually. So just take a look at what a Berger Paints did. Asian Paints, the kind of move that it's been having after its numbers, and even Kansai Nerolac, which came out with its earnings and got a big fillip in the market yesterday. Kunal, any trading opportunity, although these are big spurts that one has been seeing, almost breakout kind of moves?
So I think Berger Paint is something which I would probably keep an eye on even from current levels. In fact, you do a price comparison between Berger Paints and Asian Paints. Asian Paints is almost 10% higher than its 200 moving average. It's recovered more than 400 to 500 points from those 2,600 or 650 lows for itself. Berger Paints, on the other hand, has just recovered, I think, 15% from its recent swing lows. I think 570 was the low, and the stock is currently at 650 odd levels. So looking at the divergence from the 200 moving average, the underperformance for the stock, I think there could be a better trade which could be emerging into a Berger Paints at current levels. Even if it completes that mean reversion towards the 200 moving average, we could be looking at least another 60 points on the upside. So 700, 720 could be a range possible for Berger Paints.
These stocks certainly fired up in yesterday's trading session, particularly a Kansai Nerolac. But let's move on to the macros, and preliminary data shows that India's trade deficit surpassed $31 billion in July, which is a record gap, even as exports are down due to the ban on export of wheat, steel and fuel. We exported about $35.2 billion worth of goods in July, while imports have surged to $66.2 billion, and the figures are likely to worry the government, even as the rupee's decline has made fuel imports more expensive. Meantime, the Finance Minister Nirmala Sitharaman did admit in Parliament that there is indeed inflation in the country, but she said that we must recognize that our macroeconomic fundamentals are strong. Let's listen in.
Indian economy, compared to the situation prevailing in many of our peer groups and compared to the situation in many of the developed economies, is definitely much better. But that does not mean that we are running away from saying, because, like some of the members have said, imported inflation, and because of the imported supply chain related problems and global commodity prices, we are being impacted. These are realities and we are here to answer and discuss on them. Nobody is saying or nobody is in a denial about price rise.
There you go. That's Finance Minister Nirmala Sitharaman talking about inflation. Remember earlier this week in Parliament also she said there is no question of recession, there is no question of stagflation. We'll of course know a lot more come on Friday when we'll have the outcome of the RBI Monetary Policy Committee meet as well after the US Fed 75 basis point rate hike. That should be a big trigger for all of us back home as well to watch out for. Okay, let's talk more about the stocks as well. Amnish, I'll come to you with this one. You know, we've been talking and we spoke about how leadership was coming in with the auto stocks, and we saw that happening. 10% weightage on the index. We've started to see data that has also started to come out for the July sales numbers. The question now is, and after the run-up that we've seen in the stock prices, is it priced to perfection?
You see, when it comes to autos, we have to actually look at two factors. One being that there's a pent-up demand in this sector, because from the last 3 years, first in 2019 the sector as such was down, then we had COVID for 2 years, and there was an impact due to the supply chain disruption and semiconductor issue also. Now I think in this year all the problems, they are getting sorted out, and so due to the favorable base, the growth numbers are looking very robust. But having said that, we have to dissect the sector into 3-4 segments. For example, tractor industry. I don't think tractor industry is going to replicate the numbers like what a commercial vehicles or a passenger vehicles will show this year. So I would say tractors and two-wheelers will not be doing that great, but your passenger vehicles as well as your commercial vehicles are the segments which are likely to do exceptionally well this year. So as far as your trade is concerned, I think the stock has come up. There has been rally in the, last month or two in particular. But I think this is the turning of the cycle, and whenever the cycle turns for any of the sector or the segment, so although initially it might seem that the stocks have run up quite a bit, but I don't think this is the end of the rally or they are priced to perfection. I think there is still reasonably good amount to be made, money to be made in many of these stocks over the next, say, year and a half kind of a scenario.
Okay, let's also tell you what else is happening outside the world of business and stocks. Robinhood Markets Inc. is eliminating almost a quarter of its workforce after a rough start. First year as the company went public. The company dismissed about 780 people, or about 23% of its staff, in its second round of layoffs this year, and also announced the departure of a top executive. Back home, 8 cases of monkeypox have been reported so far in the country, and a national task force has been set up to monitor the developments related to the virus. Delhi itself has reported the latest and its 3rd case of the disease. Kerala has reported 5 and 1 related death as well.
Meantime, over 100 women working at an apparel unit in Andhra Pradesh's Annakapale district fell sick. The workers complained of nausea and vomiting after a gas leak at the apparel manufacturing unit. And India won a historic gold in the lawn bowls at CWG. The Indian men's team also retained its table tennis gold. The country's total tally of medals now stands at 13.
I want to go back to PSU banks, and Kunal Nuresh, let's have a discussion going for our audience who are looking at a trade. Let's keep State Bank of India aside. Nuresh, mine is State Bank of India, which is the strongest PSU bank, and a one line on it, why?
So the strongest in terms of price action is Bank of Baroda. Bank of Baroda has actually crossed the 52-week high yesterday. Now, this is a stock which was not in the radar for a long period of time. Even after today's move, it is still available at the prices it was in 2009 to 2015. The all-time highs for the stock is 220. But technically now the stock has made multiple bottoms around 1995. It made a top around 110, 120 in February as well as in April. And now we've crossed above it. So clearly this is a price action which is extremely positive. And next one is Canara Bank, which is again recovered well, but still away from the highs made in February to March, which were around the 250, 270 mark. So clearly Bank of Baroda has taken the lead in the PSU banks as such.
What about mid-tier old private banks? Kunal, let's say it's Federal Bank or perhaps a Karur Vyasya Bank. DCB is technically not old, but yeah, it's a mid-tier private bank.
So I think from there, I think Federal Bank is the one which looks very attractive to me on the charts. In fact, it's the first one to hit back, I think if I'm not wrong, a major 2-year or a 3-year high for itself. 105 was a huge resistance for Federal Bank, and the stock this time around was one of the first ones to try and not just come back to the resistance point, but even break past about that. So that's a very attractive chart for me, and I would probably expect another 30 to 40 rupees on the upside. So closer to 150 is where I would place a target for Federal Bank. From the PSU names, and I believe that even Canara Bank holds a lot of potential from current levels. So I think it's at 230 approximately on the cash levels, and I would expect the stock to rally up at least another 15%. So 260 is where I would place possibly a 2-month, 3-month target for Canara Bank as well.
Okay, I just want to make one point here, and I'm going to get a reaction from Amnish on this. Is that I look at metal stocks. Let's look at metal stocks from the beginning of the year, where Tata Steel was at the beginning of the year, where Tata Steel today is. Because for me, Tata Steel is this pivot stock to represent the activity in the metal sector. Tata Steel this year, it is nowhere close to its 52-week high, even after its recent price hike. Similarly, look at Infosys. That is the pivot stock for me, because it is owned largely by institutional investors, unlike TCS, where the Tata ownership is very high. Infosys is again nowhere close to its 52-week high, nowhere close to its 52-week high. Siemens on the other side is at a new 52-week high. State Bank of India is at a new 52-week high. Mahindra & Mahindra is at a 52-week high. Paytm nowhere close to its IPO price. Policy Bazaar nowhere close to its its IPO price. What is the point I'm trying to make here? The point here is that look at global denominated sectors, metals and IT. They are nowhere close to their 52-week high. These were the toast of the towns at the beginning of the year. They're nowhere close to the 52-week high. Domestic sectors, autos, it's a domestic sector. Banks, it's a domestic sector. Those stocks are making a new high.
But Kunal, Tata Steel last week saw some very big moves, right? Is there case in building a point that maybe selectively metals could try and catch up to their previous highs?
So yes, there is a strong case over there, and I think Tata Steel, Hindalco has done reasonably well from 330 odd. The stock is now almost at 420, so that's a decent recovery of almost 30% for Hindalco as well. Even though we've not seen the same extent of rally coming out into the likes of maybe a Vedanta or JSW Steel and Jindal Steel, etc. But I believe that if one has to bet on the metal pack and specifically the two names, I would still go with Tata Steel at current levels of 105, 106 post the special situation adjustments, and as well as I think Hindalco at the 410 odd levels. I think both these stocks are one of the strongest or could be one of the strongest stock from the entire pack, and they could continue to march up higher if the market setup is remains to be bullish, and if the metal stocks they continue to see a rally, I would expect these two stocks to outperform.
Okay, so that's the pecking order coming in from Kunal. We look at metals, in particular, Tata Steel on top for him. It's that time of the show as well where we ask our charters for their top bets when it comes to the broader markets, money-making ideas. So I'll come to you, Naresh, first. What's on your radar?
So that's a buy on Lemon Tree Hotels. You've seen hotel as a sector do well. Indian Hotels just hit a new 52-week high recently and an all-time high. Lemon Tree Hotels for the last 4-5 months has been consolidating. Three tops around 7100, setting up for a range breakout above that 71 mark eventually. Keeping a stop loss at 64 and a target price of 80 plus in the short term.
And Kunal, coming to you now before opening bell from the broader markets, what's got your attention?
The stock we just discussed, sometime back, buy on JK Paper. expecting the stock to continue from where it left off over the last couple of days. Targets to be kept at 414, stop loss at 384.
I thought everybody is going digital and paper stocks are making a comeback.
Yeah.
Just think about it. The world is becoming digital. Everything is becoming
Say someone
cloud.
who has a pile of paper and notebooks right next to him.
That's what's driving the stock.
I'm an old school guy. I still say it very publicly that instead, but I still use my pen and my pencil and my book and do marking in my book.
Education.
But that's the way it is. I mean, there are these small trends which are very strong trends, like paper stocks, sugar stocks. There are these small trends. The wave in the commodity cycle is back, but sugar has not corrected the way how other commodities have corrected. Paper has not corrected the way how other commodity prices have corrected. There are supply imbalances which are there, and they are creating different challenges. Like what semiconductor created for a lot of sectors, the same supply imbalances I think are there in sugar, they're there in paper, they're there in plywood. So they're small sectors, nothing great in terms of a market cap, but yes, there are a lot of paper stocks, a lot of plywood stocks, which may just excite our trade audience here. Which is your favorite small commodity or niche sector, Amish, where you think that in the near term, whether it is dynamics or demand or the cycle, everything is favorable? Is it paper, is it sugar, is it both? You can add tea also after the Sri Lanka problem.
Okay, so you see, as far as your sugar is concerned, I think sugar is very sweetly poised. For the simple reason that in India, the sugar prices had not moved up in tandem with what was happening globally, but here the story is more revolving around ethanol and the entire ecosystem. So sugar companies, I think over the medium term, they should continue to do well. Now, as far as your paper is concerned, I think in paper there is a disruption in terms of, say, the raw materials also. The prices have moved up, the companies have gained. And so the integrated players there, they have done very well, particularly if you look at, say, ITC's numbers, because ITC eventually is the largest paper manufacturer in the country. So the kind of margins which they have reported, I think it is 4 to 5% higher than their all-time high. So, but in case of paper, I think I'm not sure how long this year, you can say, sharp upsurge in margin will last. Sugar to me seems to be much more sustainable and structural trend in comparison to paper at this point of time.
Okay, let's get in a view then on the charts. Naresh, we spoke extensively about Thermax, the kind of quarterly numbers, fairly optimistic outlook in terms of demand, input costs as well, and then Siemens, where the order booking was decent as well. How are you looking at these two stocks on the charts?
So Thermax has made a false start. It gave a breakout about 2150, flopped out back to 2050. Has not broken the swing lows as such. So again, could be a chance towards a breakout. The stock has been more sideways compared to the rest of the names. So overall out here, till the time the stock is about 2000, the trend is positive. I would expect it to slowly and steadily in the medium term go towards 2500 mark. So positive on Thermax. Siemens is something which has done really well over the last 1 month. The stock gave a breakout about 2500, made a top around 2800. For the last 10 days, 10 to 15 sessions, it has been consolidating. Expecting it to consolidate a little more, but the trend is still extremely positive, where the next target should be closer to 3200 levels.
All right, some other stocks that will be in the limelight on the back of numbers. You've got something like a Brigade, which came out with a pretty solid set. Operationally, the numbers were quite strong. And then you've got Jubilant Pharmanova as well. This is with respect to another news trigger that the completion of the FDA audit has been conducted at the Roorkee plant with 6 observations. So we'll also be monitoring these two candidates in today's trading session. Amnish, just let's get in a view, since we're talking about some of these real estate stocks. What have been your observations on the kind of numbers, the demand trends that we're noticing here?
You see, real estate companies, they have been doing really well, say, over the past few quarters. And I think if you look at even the recent trends, the new apartment bookings and all, they are not slowing down. They are keeping it up. So I think this is, I would say, a very sustainable trend, because post-COVID, a lot has changed. Now, you can say the consumers are, you can say, booking more apartments, real estate activity is there. Yes, there could be some, you can say, slowdown here or there in certain pockets when it comes to, you can say, residential construction. But I think this is a trend which has started, and I don't think it is going to reverse in a hurry. I think it is going to be a three to 5 year kind of a trend. So maybe 1 quarter or two there could be some hiccups, but I think the real estate companies, the overall bookings and the entire, you can say, the growth trends, they are going to be sustainable, and in certain cases they might even accelerate from here.
Great to have you on the show, Amnish. We'll let you go on that note. Let's just revisit what the pre-open rates for the markets are looking like. Flat start, that is what the index is headed in for. But the one stock that I definitely want to mark out is Zomato, because that block deal should be happening today. That is what we're indicating, wherein Uber Eats is going to exit a chunk of its stake. And I think that would have happened. 5.5% lower right now for Zomato. 52.50 is where that stock is. But as promised, the big ET Now news break, and an exclusive at that. Sources have been telling your channel that SpiceJet is in a discussion with a Middle Eastern carrier for a possible stake sale. Samir Dikshit, my colleague, is here with more on what he's picking up. Samir, on SpiceJet?
Yes, definitely. This is a big news that is coming in from the aviation sector. The SpiceJet airline, which is going through a tough time, especially when it comes to the financial aspect. Now what we are getting to know from our sources, that airline is in active discussion with a Middle Eastern carrier for a stake sale. And we know that currently 𝐤𝐤𝐿, who is the promoter of SpiceJet airline, he holds 60% of the stake in SpiceJet airline. And it is very likely that this discussion, which is quite actively going on for a stake sale, will be closed soon. So currently, we know that there are 3 major players in Middle East. The first is Emirates. We have Qatar Airlines as well. So there are 3 airlines which are there in the race, and active discussion is going on. And not just this, not just with the Middle Eastern, but we are also getting to know from our sources that a big Indian business conglomerate is also in talks with the SpiceJet promoter for making a certain amount of investment. Now, whether it could be a PE sort of an investment that could be done, that is yet to be seen. But yes, there is an active discussion going on for a stake sale in SpiceJet, where the company's promoter, 𝐤𝐤𝐿, he might offload his stake to a significant percentage. In entire development, what we got to know from SpiceJet in the official response, the SpiceJet airline has said that yes, they are in continuous talks with multiple investors or those who have shown keen interest. But yes, this is to sustain the airline. This also indicates the fact that there is some financial tough time that the airline is going through. And currently SpiceJet is an established brand, having routes, aircraft, in the sense that they have got a sustainable model. But if there is some liquidity issues, and if it could be resolved, then this will be better for the airline. And that is the reason that currently the airline is in talks with the Middle Eastern carrier.
Samir, a very quick follow-up question. It's not for the first time I think SpiceJet is in conversation to sell stake. It's happened previously also. A couple of years ago, 𝐤𝐤𝐿 did try to sell stake. Do you think this time it's serious?
Yes, sir. You're quite right on this part, that they were earlier also in discussion regarding the stake sale. But this time, when we are talking as of now, this airline is going through a very bad financial problem. Okay, they have got huge losses, and these losses are mounting continuously with each passing quarter. And that is the reason that now SpiceJet is actively looking to have a investor, and for this there are 2 players. What I know personally, that there are 2 players from Middle East, though the airlines are 3 in the Middle Eastern, from the Middle East, especially the Emirates as well as the Qatar Airways. But yes, the discussion is going on, and it is very likely that this discussion might be taking a final shape in coming 2 or 3 months.
That's the ET Now exclusive coming in. Likely discussion with the Middle Eastern carrier. We also understand, as Samir highlighted from sources, that an Indian conglomerate has shown interest. The SpiceJet commentary remains that they are in discussions with various investors for sustainable financing and will make appropriate disclosures with applicable regulations. This is certainly going to be a big newsmaker in trade today. But to the index calls then, what is it that our chartists are advocating this morning? take a look at your screens. Here's the take from Kunal, a buy recommendation, a unanimous hold call from the rest of our charters. Remember, we're looking at a level of about 17,350 on the index this morning. The market moodometer, it's a hold recommendation on the Nifty. That's the consensus call. Now the Nifty Bank Index continues to remain the same stance. Unanimous hold call coming in from our chartists, and that's exactly what the market moodometer is indicating on the Nifty Bank Index. A categorical hold recommendation.
The block deal in Zomato looks like is over. I mean, that is going to be the top. That was the talking point yesterday. That will be the talking point today. 21.1 crore shares. The multiple block deal has been done. We understand it's one of the investments of Uber. And I would say on the other side, the buyers really have to be multiple here. 21.1 crore shares. That's about 8% of the equity of the company. And it has been done perhaps at a discount. Otherwise, the stock would have not gone down by 5%, about 5.5% from yesterday's close. Okay, 50 seconds to go. And is there going to be a lot of green which would be greeting us on the screen? I would say the same thing, which is this is a market where you are in middle of a great rally. You can talk about the technical fatigue of the market, which should happen after a 13% rally from the low. But fundamentally, I don't think we are in this bubble or an overvalue or a stretch zone looking at macros, earnings, and where the potential of demand is moving. We'll have an engaging discussion in some time on the same aspect, that what is the best way to judge valuations. But for the moment, the big screen, and I reckon that it's going to be a lot of green on the screen again. The pace with which how some of the mid-cap stocks have made a comeback, the force with which how some of the PSU stocks have made a comeback yesterday, I just think that will spill through for a couple of more days more. First rates, Reliance Industries, Titan, Infosys, Power Grid. The breadth is solid. It's a flat start, but the bias is what is important. It's a good start. I think what is important here is that the breadth is staying in the green irrespective of the market action. Let's look at Zomato, Bharti, Thermax. These are important newsmakers. You would also throw in a name like Gati, talk about some smaller PSU banks or mid-tier PSU banks as well, because that's where all the action and the gravitas of the market had moved yesterday. The breadth is firm like a rock. Absolutely like a rock. Gati is reacting to numbers. Thought as much. I'm not surprised. We are in this market where markets are saying, markets are actually saluting you if you are delivering. Markets are giving you a table-thumping response the very next day if there is an iota of profit beat and a strong underlying management commentary. Where is Yes Bank? Where is Zomato? I want to look at two stocks which in a sense are patronized by traders. Zomato because of the block deal, and Yes Bank because of this source-based indication what we have about who could be the new board seats and who could occupy those board seats. But it's not bad, Aisha. SpiceJet is reacting to the news. Yes Bank is reacting to the news. And Zomato, after yesterday's hullabaloo, I think the follow-up buying is not there.
Yeah, the follow-up buying is not there. A couple of other stocks which are going to be in focus as well this morning. And let's just bring up the entire list of the buzzers from yesterday. I mean, everything from a BOB to a Can Bank, they were all holding out very smartly in trade. We were just talking about as to how the move within banks is now extending itself from the likes of ICICI Bank and SBI. Clearly, that's the case in point. ONGC and Reliance, considering the government last evening increased the windfall tax on domestically produced crude to about 70,750 rupees per ton. This move, remember, is going to hit producers like ONGC, like Vedanta, and ATF as well. You know, that's where the other announcement has come. So maybe some of those aviation quarter because of higher expenses. The stock is relatively muted this morning. Voltas as well, which came out with its numbers, reported a decline of about 10.5% on the pact. Also, the Adani Group in general, they're going to be digitally integrating their business, link data centers, build globally largest industrial cloud operations, develop a super app, looking to offer a suite of services across their 400 million customer base. That's the announcement that came by yesterday. Godrej Properties too, they too came out with their numbers, so look out for that too. And Yes Bank, I mean, besides all the news flow that we've been picking up on the board seats, they're going to be convening the AGM on August 24th, and they're going to be seeking the shareholder approval for the proposed capital infusion of 8,900 crore rupees. So look out for that as well. Very small but negligible news on ITC. They've exited the lifestyle retailing business following a strategic review of their business portfolio. Subex, wherein Reliance Jio Platforms has announced a partnership with Subex for AI orchestration platform that's called Hypersense. It's locked in upper circuit. Subex 20% higher, 3330 is where Subex is currently in trade. Lemon Tree came out with its numbers, Thermax came out with its numbers, Jubilant Pharmova, wherein the US FDA has issued 6 observations on their Roorkee plant, Aurobindo Pharma as well, wherein the API non-antibiotic manufacturing facility in Andhra Pradesh has received a Form 483 with 3 observations, but none of these observations are related to data integrity issues, which has been a niggling worry for Aurobindo. Stock, though, is currently lower by about 1% as we speak. But for the index, it is definitely a quiet day. Kunal, though, any individual trend that you're picking up?
So, not specific towards any certain sectors, but then I think few of the stocks which I believe should rally upon good momentum for themselves. One of them should be Granules as well. I'd suggested the stock yesterday, and I believe that the stock is on the verge of a decent breakout for itself. So I think at 316.17, Granules could be a good buy for another 15 rupees on the upside, so 330 approximately as a target. NMDC is the other name which I believe traders should be looking out for a short-term buy at current levels. And the third one was HPCL. We discussed, Hindustan Petroleum specifically yesterday as well. Looks attractive from a short-term play as well. At least another 5% on the upside is what I would expect over the near term.
Okay, and with that, Naresh, I'll come to you with opening bell behind us and just seeing what's happened. What's your trade for now?
So, 2 names. First is a buy on Bandhan Bank. The stock is up to 2.5%. The only bank which has not seen much of a rally. 290.95 is the resistance, I think, which could be crossed. So out here, a buy with a stop loss at 285 and a target price of 315. Second is a buy on Power Grid, which has continued with the momentum from yesterday. A stop loss now at 222 and a target price of 235.
Amish Shah, Head of India Research with BofA Security, joins us. Let's